Hey everybody, just coming in to do a quick update on the Disney earnings and what we saw happen here and what was pretty much broadly being called a major disappointment across the board on all metrics and really expectations here for the stock and for the company. I'm Sean from Invest to Live. Thanks for watching. Please give me a like if you can and subscribe if you aren't. We'd love to have more folks watching. So let me just get that out of the way. So let's jump right in. So Disney reported their fourth quarter earnings on Wednesday after the market closed. And frankly, they pretty much missed estimates across the entire board, during the quarter. So the stock was down quite a bit as it sits right now, as of today, which is the 11th of November. We're sitting down over 6.5%. That's about $11.62 down at 162.83 a share. And this is a big drop, frankly, and for better or for worse, pretty concerning, I think, just in general from a consumer goods perspective, from the way people are engaging with Disney. But let's jump into it. So, real quick, earnings per share were 37 cents adjusted versus a 51-cent expected. That's a huge miss. That's a significant miss. Revenue was coming in at 18.53 billion versus an estimated or expected 18.79 billion. The other piece of this that's really probably the most disappointing is they only added 2.1 million Disney Plus subscribers, which brings them up to a total of 118.1 million. So although this was in line with what Disney basically was saying, I think that the feedback from Disney CEO was that they just hit a lot of headwinds. And it's tough because we're seeing other streaming services really compete hard in this space. And this is an area Disney really, really needs to go big time. We also know that for the most part across the board, analysts were expecting a pretty bullish outlook on what earnings would be, hoping for a lot of new subscribers, really hoping for a lot of growth here. And I think we just didn't get that at all. Obviously, look, Disney's still doing a lot of work as far as getting more shows, more movies, more content on Disney Plus. I think that we still need to see these parks open up fully after the pandemic, what that's going to mean for revenue. But the other sort of big concern here isn't just a lack of accelerated growth for Disney Plus, but also if we look at things like the monthly average revenue per subscriber, we only came in at $4.12, which is actually down 9% on a year-over-year basis. And they basically said, look, this has to do with a different mix of Disney Plus subscriber types, where they're coming from, etc. But this is just shrinking because there's lower price points in general for Disney Plus because it's being bundled with other services, which is going to obviously cut into those margins. So these are just a number of different areas where I think there's some concerns, and there's some growing concerns. There's some even further concerns around cost of acquisition, how they're going to ensure that those margin rates stay high, what they're going to do to ensure revenue and earnings per share stays where it needs to be. But broadly, this is a quick one. Disney missed earnings across the board. Subscriber growth is not what people were hoping for. Margins on subscribers are not what they were hoping for. Year-over-year bases were not what we were hoping for. We didn't see the acceleration we were hoping for. So does this mean things are over or it's a terrible situation? Well, no, of course not. I think that Disney has a good leadership team, and I think they'll find ways to work through this. We are seeing an immediate hit to the price, though, of shares. As I stated earlier, it's actually down quite a bit, over 6.5% right now as I'm recording this. So, I think what we need to do as investors here is understand, do we think that this is something we can see turned around? Do we expect the margin on streaming to go up on a user cost perspective? Do we think that when parks open up, this will really start to skew us towards more revenue, getting more out there? I don't know yet. I think we have to look at the numbers again and really drill in and understand what it's telling us. But I'll say this, we watch Disney Plus in my house. I know my kids are fans of the Marvel Universe. Obviously, I've got Minnie sitting behind me here. I think at the end of the day, this is a company that is going to be affected by a lot of varied pieces of what's going on in the current economic situation. They're not going to get the benefits of streaming when they also have a lot of revenue that has to come from parks. They're not going to get the benefit of the parks when they have to keep cutting into the benefits of the streaming. It's like there's a balancing act of we need more subscribers, and those costs of getting bundled in with other services are going to keep eating into those margin rates. The parks are sort of in an all over the place sort of feel right now where we don't know which countries are opening and when. We don't know what that's going to mean for park attendance, getting back to full capacity, et cetera. And then even in a sense of inflation here, like buying toys that are Disney branded or within, that Disney licensing are getting expensive too. And a lot of people are finding ways to cut back in their everyday life. And, regardless of the holiday seasons and Christmas coming up and people spending in that space, I think that there's going to be a lot of double checking of what makes sense, what toys are needed or necessary. And I think that's the reality of the situation we're in. So I think the best bet here is stay tuned, keep watching the numbers, see if we get improved margins or accelerated growth. Because look, it doesn't have to be both. If we get a ton of new users, but we have to shrink the margin a little bit, that's okay if there's a net gain. Same as if we have a little bit slower subscriber growth but higher margins, that's okay if there's a net gain. We just have to see those net gains and or accelerations where we're getting that growth from one piece or the other. So with that, thanks for watching. We're always paying attention to these things. Again, have a good day. Have a good week. Thanks, everybody.